Hello there, this is fairbinaryoptions.com, and like the name of this recording suggests, we are looking to buy put options on the euro Australian dollar for next week. What will be the expiration date? Well, by watching this recording you will know what we are looking at. Next week is an extremely important week for the cross. This is a cross. The euro Australian dollar is the cross between the euro US dollar and the Australian dollar US dollar, as they are the majors. And this cross basically is going to be influenced next week by the Reserve Bank of Australia minutes that are going to be released next week. These minutes are the minutes for the previous meeting we had with the no change in interest rates in Australia. And then of course we are going to have on Wednesday the FOMC statement, and the euro dollar and the Australian dollar US dollar is going to move on that. So whenever there is such an important event that is coming to the market, so two events now, on one in Australia, the other one in the United States, this cross should travel. Analyzing the moves, this is a 4-hour chart, and after the highs, after this move to the upside, after the highs here, after this one, a five-way structure I would say, then this move to the downside, the one that you are seeing here, it is channeling to L, as you can see. It is channeling to L. Corrections are almost the same. I would say that this should be labeled as a triple combination, the move to the downside. If you go on the lower time frames and you try to analyze the move, let me bring my logo from there, and you are trying to label the move, so let's zoom out a bit like this, and this should be labeled as, again, a triple combination. Well, the triple combination starts from the upside, and I would say that this is being an A wave here to the downside, wave A, then a B wave to the upside, AB, a C wave to the downside, so A, B, C, there you go. This would be the first zigzag, I would say, A, B, C. Then we have an X wave, of the same degree, another zigzag to the downside, A, 1, 2, 3, 4, 5 to be done here, so A, then the B wave there, so A, B, and the C wave to the downside, most likely here. And then what next? Well, another X wave to the upside, and then a contracting triangle that should end A, B, C, D, E. So again, A, B, C, D, like this, A, B, C, D, E. The contracting triangle should end not here, but around these levels here, like this. So either here or there, it doesn't change anything. So from my point of view, we are looking at a contracting triangle now of the same degree, A, like this, B, C, D, and an E wave there. Any contracting triangle travels between the B and D trend line and A and C. So basically this should be the B and D trend line. This should be the A and C trend line, okay? And this is our triangle. It may not look, you might say, well, what kind of a triangle is this one? Well, it's a triangle that is happening on the currency markets. So the whole move from the upside, this one, from here, and to here, should be labeled and should be called a triple combination is being named. This one here to here is a triple combination. ABC intervening X wave, ABC intervening X wave, contracting triangle, A, B, C, D, E. From this moment on to the upside there, we have an impulsive move, we have the zigzag, and this should be labeled as wave 1, the second wave there, the third wave to the upside, the fourth wave here, and of course the fifth wave to the upside, 1, 2, 3, 4, 5, an impulsive move. Third wave is extended, and then the whole move here is being a first move to the upside, 1, 2, 3, 4, 5. Then a corrective wave, and another, if you can see here, 1, 2, 3, 4, 5. So this whole move here should be a double zigzag. Normally, this should be labeled wave A of a bigger degree. Normally, this should be labeled the B wave. And of course, a C wave to the upside, A, B, and C. And this is our move, our scenario to the upside, A, B, C, and this to be called a zigzag to the upside for a second wave type. So A, B, C for a second wave type. The second wave type should be of a bigger degree. Something like this. And if the second wave is done there, then the first wave most likely is going to be done here. Now remember what we are looking for. We are looking here from the highs there, we are looking for an ending diagonal to the downside. So this to be 1, 2. Now we look for a zigzag ABC to the downside. So 1, 2, 3, 4, and the fifth, something like this. Anyways, looking for price to go below the end of the previous wave, so below 142 here, 30, in a zigzag or a zigzag family pattern move. And this is the end of the second wave. And this would be the reason why we are looking to buy puts. Early Monday, remember, early Monday, buying put options with end of week expiration date, okay? And then during the week, we are going to trade the lower time frames. But on Monday, we are preparing on weekend for what's going to happen on next week. So buying put options with end of week, basically next Friday, expiration date, is the logical thing to do on this outcome. Or depending on the options or the expiration date your broker offers, anyways, buying put options, because from this moment we are looking for price to go something like this, in a corrective wave, like this and like this. So this to be a zigzag or a zigzag family pattern anyways, so something like this, A, B, C, to go below these lows. Ideally should go way below this, even below this these lows here. It remains to be seen. Thank you very much for being here. Until next time, stay safe on the markets. This is fairbinaryoptions.com. We are buying put options with end of week expiration date on Euro, Australian dollar, and all these analyses are possible due to the help of our general sponsor, Lionine.